Pinterest reported financial earnings for the second quarter after the bell today, seeing their stock rise in after hours as much as 23% on better than expected financial results. And in addition to earnings, we also got news of Elliott Management's stake in Pinterest and their outlook on the business as a whole. And in this video, we're going to be taking a look at the Elliott news as well as Pinterest's financial report to see what new information we can learn. In my previous video on Pinterest, I highlighted Elliott Management's stake in the company and the potential for us to get further news with regards to Elliott's stake in Pinterest on earnings day. In that video, I was also considering the alternative of a Pinterest PayPal merger or a leveraged buyout, some type of acquisition, some business decision made with Pinterest as an entity. And although we did get news from Elliott Management sharing their insight and thought process behind their large position in Pinterest, there was no new developments regarding a buyout or an acquisition at this time. But before we jump into the specifics of what Elliott Management exactly said and the speculation around what they said, I want to first cover the earnings report. This was the first quarter that the new CEO, Bill Ready, was at the helm for Pinterest, and it saw the company missing on both the top and the bottom line. Pinterest reported $666 million in Q2 revenue versus $671 million expected by analysts, 11 cents EPS versus 18 cents EPS expected by analysts. Now, the $666 million in revenue represented a 16% quarter-over-quarter increase and a 9% year-over-year increase. The business highlighted that the strength came from large retailers and their international business, which was partially offset by weakness due to macroeconomic uncertainty. Now, if you've seen any of my previous Pinterest videos, I explained the two main drivers for the business are monthly active users and average revenue per user. My bull case for Pinterest has always been that their monthly active user count is a huge positive, and their low average revenue per user is the clear opportunity for where further monetization lies. It's their roadmap for their future growth. So let's start with monthly active users. Pinterest, for various reasons, has had monthly active user declines over the past several quarters. The main among these reasons are macro headwinds around reopening. Pinterest was one of those companies that had huge growth during the pandemic years because everybody was essentially forced to stay home. And now these numbers are for the first time just normalizing as we're coming out of that period. Also, in November of 2021, Google changed their algorithm, which also affected how Pinterest gains new users, how Pinterest reaches new users, and overall just affected Pinterest negatively. Monthly active users were down 5% year over year to 433 million for Q2. However, if we take a look at monthly active users from a quarterly basis, for the past 3 quarters, this number has been stabilizing. When we consider it through a quarterly perspective, it suggests that this correction from COVID for monthly active users may actually be behind us, maybe in the past. In fact, interestingly, Pinterest has added around 12 million new monthly active users on average every single quarter from 2016 to 2022. The other interesting tidbit to note here is that the company highlighted that while the global monthly active users declined, app users grew by high single digits, accelerating off of Pinterest Q1 numbers. So their mobile users actually increased. Pinterest also saw continued strength with younger demographics and global Gen Z users growing in the single-digit area year over year. The majority of their declines were from web users. By contrast, now flipping to average revenue per user, this number is up 17% year over year globally and 20% in North America and in Europe. And we can see how average revenue per user contributes to revenue. For example, a $5.82 average revenue per user in the United States and in Canada represents about 81% of the business's total revenue. However, the US and Canada only makes up about 21% of total users, making the runway for growth very clear. 51% of Pinterest users are outside of Europe and North America. However, this segment only accounts for 10 cents average revenue per user. Imagine now the monetization opportunities that if we had, a number that was maybe in between $5.82 and 10 cents, what Pinterest will be bringing in terms of revenue. And this is exactly what I'm highlighting as my long-term bull case is Pinterest monetizing more of these users, which leads to them making multiple billions of dollars every quarter if they can do that accurately. However, that's very much easier said than done, which is why it's also my long-term bull case for Pinterest. And now that we've talked about revenue, monthly active users, and average revenue per user, let's run through some of the expenses. Overall, Pinterest had higher expenses in all categories for the quarter, with research and development growing the fastest at 37% increase year over year, followed by general and admin expense up 35% year over year. Pinterest highlighted that this growth in expenses reflects an increase in headcount and infrastructure spend, as well as higher consulting and facilities expenses. Now, if we take revenue and the expenses into account and move down the list, we can see that Pinterest for the quarter reported a $92 million in adjusted EBITDA, which is a 48% decline year over year. And ultimately, this resulted in the company reporting a net loss of $43 million for the quarter versus a net income of $69 million a year prior on the same quarter in Q2 2021. And look, while Pinterest is still profitable on a trailing 12-month basis, if we aggregate their last 4 quarters, they are still profitable on that perspective. The drop in adjusted EBITDA, as well as the drop in net income, the loss that essentially they're reporting, while it's expected given some of the headwinds, is definitely not the best trend you want to be seeing as a long-term investor in Pinterest. However, one of the details in their finances that gives me a peace of mind is the fact that Pinterest ended the second quarter with $2.66 billion in cash, which is up in the past 6 months. Now, it's important to note that Pinterest holds no long-term debt on their balance sheet, meaning that the business had amazing runway for growth given their burn rate, essentially how much money they're losing every quarter, and how much cash they have on hand. They have a long runway to sustain their business further. So now let's move on to some of the more qualitative aspects in Pinterest's earnings report. They highlighted in their shareholder letter that they continue to improve the heart of the user experience with advances in machine learning to improve the home feed recommendations, as well as a continued focus on growing the content ecosystem through the expansion of content tools and partnerships. Through the use of machine learning, Pinterest highlighted a significant improvement in idea pins on the home feed. They signed a multi-year partnership with Tastemade to bring high-quality video across different verticals. Basically, Tastemade, this new company, will essentially create content for the idea pins and stream hundreds of hours of programming to Pinterest TV. So immediately in my mind, I saw massive synergies to Google, right? Because we see a similar direction with Google and with YouTube in terms of video content curated to users, and Pinterest is moving in that direction similarly with idea pins through their partnership with Tastemade. In addition to this, Pinterest launched idea ads in 34 markets, which now offers advertisers a creative new ad format. Basically, idea ads are immersive video ads designed to show ideas in action, which means that content creators can basically now tag brand partners directly in their content when sharing ideas about brands and about further driving awareness. So this entire pivot into video is really interesting to me from a content creator perspective on Pinterest and the use of Pinterest TV. And it brings us to the category that I was most interested in reading about this report, which is shopping. In this category, Pinterest talked primarily about their API, which enables merchants to very easily upload and manage their product feed, as well as important details around their products, such as the price and availability. They can update this in real time through the use of Pinterest APIs. In addition to this, they're testing customized shopping pages driven by algorithms based on the user's unique experience and style. So they'll basically curate an experience for advertisers to have a unique shop on Pinterest that's curated based on what their users are seeing. In Q2, Pinterest acquired the Yes platform, which brings AI-based commerce in fashion and shopping. This platform is basically going to help Pinterest advance to the next level with regards to shopping. Now, if we talk about shopping, we're also going to be talking about advertisers. And from an advertiser perspective, Pinterest expanded in Q2 in Japan. They also expanded in Latin America with Chile, Argentina, and Colombia. Interestingly, shopping ad revenue grew at double the rate compared to overall year-over-year revenue growth for Pinterest. The business introduced product group suggestions for merchants to easily add or remove groups for shopping campaigns or storefronts, which is further an effort to remove friction for merchants looking to scale on the Pinterest platform. Now, looking forward into Q3, Pinterest highlighted that they're expecting to grow in the mid-single digits year over year. This was lower than many people were expecting Pinterest to grow. So if we take a step back and sort of look at this earnings from a 50,000 foot view, Pinterest missed on revenue, they missed on their earnings per share, and they had lower guidance, and yet the stock was up in a big way. Personally, I thought that much of what Pinterest reported was not all that great. From a financial perspective, I didn't like the fact that their expenses increased so dramatically. And I was hoping for more details, honestly, on the e-commerce strategy now that Bill Reddy is at the helm of the company. There's really three reasons why the stock is up. Number one is after hearing how badly ad businesses had done last week, I think everybody expected Pinterest to miss their earnings expectations. But Pinterest, while they did miss earnings expectations, did not miss by huge amounts. Number two, I think the stock was massively oversold, and this slightly smaller than expected miss sparked a rally in the business, which is also supported by number three, the biggest reason. Much of the sustained after-hours price action came from the positive sentiment around Elliott Management and the letter that they received around their stake in Pinterest. So let's now take a look deeper into that statement, and since it's very short, I'll just read it. Pinterest is a highly strategic business with significant potential for growth, and our conviction in the value creation opportunity at Pinterest today has led us to become the company's largest investor. As the market-leading platform at the intersection of social media, search, and commerce, Pinterest occupies a unique position in the advertising and shopping ecosystems, and CEO Bill Reddy is the right leader to oversee Pinterest's next phase of growth. We commend Ben Silbermann and the board on the leadership transition, and we look forward to continuing our collaborative work with Ben, Bill, and the board as they drive towards realizing Pinterest's full potential. So what can we learn from this statement? Well, first, the obvious point that Elliott is the biggest investor in Pinterest, and secondly, the fact that they approve of Bill Reddy's previous experience in e-commerce and his transition into his new role as the CEO of Pinterest. Elliott Management agrees that he is the right stakeholder to drive significant value in Pinterest. Which brings up an interesting question of now asking ourselves, well, if not to change the leadership, why has Elliott taken such a huge stake in the company? It adds nuance to the existing speculation out there. In other words, if Elliott agrees with a new CEO transition, and if they agree with a new direction of the company going into an e-commerce perspective, do they still want to have a leveraged buyout or perhaps window dress Pinterest for a potential acquisition or merger, such as the one that was hinted at with PayPal? Or is Elliott simply investing in Pinterest because the business is just massively oversold compared to the potential that they have? I think this last piece is a very real alternative, right? Because it could very well be the fact that Pinterest, in Elliott's eyes, is just an oversold business. And the last sentence of their statement points me in that direction, where Elliott Management highlights that they want to drive towards realizing Pinterest's full potential in the intersection of social media, search, and commerce, and that they want to collaborate with the Pinterest executive team to get there. This, of course, lowers my confidence in a potential PayPal buyout of the business, but it is undoubtedly a reassurance in my own investment in Pinterest to know that a fund like Elliott Management has taken such a large position in the company simply due to the unrealized potential of the business, and in the fact that they want to work to collaborate to get there, to realize that potential. As a Pinterest shareholder, these are all things that I want to hear. And it all serves as further validation of my decision to invest my money into this company. This is one of the primary reasons why the business was up so much in after hours. A lot of the attention and responsibility is now placed in the hands of their new CEO, Bill Reddy. And as more quarters pass, investors are going to increasingly be looking to him for deliberate e-commerce strategy and that pivot. To summarize this video, while I don't think the quarter was particularly exceptional for Pinterest, it did affirm a few points in my mind. First, that the business is largely oversold and due for a rebound. Again, just my opinion. Secondly, that the monthly active users are stabilizing on a quarterly basis, leading me to believe that the worst is behind us from a monthly active user decline perspective, that we've essentially crossed that COVID hiccup or that irregularity from the trend, and that we're going to continue rising slowly from here. And finally, that we now have more clarity surrounding the rationale behind Elliott Management's position in Pinterest, and that there is a less uncertainty overall around what's going to happen with that business. In future quarters, I will be more scrutinous on the e-commerce direction that the business is heading in, and of course remain invested in Pinterest over the long term, with my ultimate bull case remaining that of Pinterest having a significant opportunity in maximizing average revenue per user runway. With 433 million monthly active users, should Pinterest ever be fully monetized or increase that average revenue per user, the business would be trading at much higher multiples than what it is today. And this is ultimately my long tail bull case. But in the short term, I'm assured in the fact that despite their net losses and despite their increasing expenses, that Pinterest has sufficient cash on hand, and that cash on hand will be a safety net to carry the business with ample runway on any changes or future pivots that they might need to make to dive deeper into that e-commerce opportunity. So am I considering adding more to my Pinterest position? Absolutely I am. But before I do that, I want to see some of my other companies report earnings to see if there's better opportunity for my money from a risk-reward perspective. But despite this earnings report, I remain very bullish on Pinterest, and I'm very excited for the company's future with or without an acquisition. Of course, I'll let you know if I do decide to buy Pinterest. I'll do that through my Discord. Please consider joining. Also, if you did enjoy this video, please consider sharing it on social media and tagging me with your thoughts. Leave a comment below if you disagree with this video or if you have further thoughts. For right now, this is the Fundamentals of Investing podcast. Thank you so much for listening.